Welcome. Today we're going to be looking at what we're expecting in the budget on the October the 27th, 2021. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's have a look at what we're expecting. So the budget this year, we've been quite lucky really because they've actually announced a couple of the changes that they're looking at implementing pretty early, which usually they do to try and just kind of ease the way to make us all a bit happier when they do actually formally announce it in the budget. So what do we know so far? Well, we know that the dividend tax rate is going to be going up from 7.5% to 8.75%. So how does this affect us? Well, this affects us because if you have a property company and you're taking a dividend out of your company, as of next tax year, so April 2022 to 2023, that's now going to be 1.25% higher than it was in the previous tax year. So that just literally is going to be an additional tax cost to us, the individuals who are taking dividends out our property company. Thankfully, it's not going to be a significant amount of money, hopefully, but it is something that if you're looking at taking any dividends out of your company, you may want to make sure you're doing it before the 5th of April, depending if you can maximise them in that tax year to just keep the tax rate down. The other thing that they've announced is they've done an increase in national insurance for a 12-month period by, again, guess what, 1.25%. And then after that 12-month period, which is going to only actually impact those in PAYE employments, they've now changed and added a health and social services levy, which will then impact everybody. So this is just really, again, an extra tax, a way of recouping all the money that they've been giving out during the COVID pandemic. They're the key things that we have been told about so far. So what else are we potentially expecting to see? Well, from a personal point of view, there's probably not really anything else they are likely to do with income tax. But again, we'll see on the 27th of October if they do any tweaks from that point of view. We already know things like the personal allowance, and they're possibly not going to be making any changes to what they've already announced in recent years. Corporation tax for companies. Now, we've already had those changes come through, so it's probably unlikely that they're going to make any changes on this further, but we'll find out on budget day if they do want to tweak things a little bit further. But hopefully that one, they've already made their changes in the last budget, the last update, so that will stick until those are implemented, and then they'll probably make a few more tweaks knowing our government and how it's going at the moment. Now, the other area that is an interesting one is the capital gains tax. Now, this is one that has been debated for a number of years now and was noticeably absent at the last budget day. So there is scope here that they're going to make some changes. Now, there have been a few discussions on whether the tax rates for capital gains tax will be going to the same as income tax rates, which would definitely increase some of the taxes that everyone would be paying on any disposals of properties. But the other thing that has been out there on the grapevine is that they might actually be looking at reducing the personal allowance. So at the minute, if you sell a property, you have got $12,300 that you can be earning from capital gains from things like stocks, shares, your cryptocurrencies, your property sales. They're kind of the main ones we tend to see on a day-to-day basis. So rather than having $12,300, they might actually reduce this. And there's a question of whether that could be reduced to maybe $2,000 or $4,000. So that might have a noticeable impact on those that have got gains from other areas. And if you're selling a property, you might have nothing to actually set it against going forward. So that's just something that might be coming up, whether it be on the 27th of October, or that might be something that we're looking at later down the line. The final area to probably just mention is the inheritance tax side of things. Again, they've remained quite silent on this tax for a little while now. So there is scope that they'll make some tweaks to this one. They're probably not going to just yet, but we will see. The main reason I say that is because it's probably a fundamental change that they might make to inheritance tax rather than small tweaks to it. So So that might be something that comes later down the line as they start looking at big ways to recoup all the money that they've spent on the COVID pandemic. It's going to be an interesting day. We'll probably see a lot of the normal things that come out with the tweaks on duties and excises that have a small impact on all of us. But we'll see whether there are any major shifts in what's happening, and capital gains tax is the one that I'd probably be saying to keep an eye on, just in case they make any shifts in that one that will definitely be affecting us as property investors. I'll be doing an update after the event so we can go through all the changes and how they will actually impact us as property investors. So check that out in November after the budget so that we can just make sure you're on the know of how things are going to affect you and your portfolio. Hopefully today you've got an idea of some of the things that are going to be updated in the budget. If you've got any questions or thoughts or comments, please do leave a comment in the box below, and I'd love to get an idea of what you think is going to be happening in the budget this year. Please like and subscribe to the channel, and let's make tax less taxing.